On this week's episode of The Thursday, it's a Facebook IPO spectacular. Everything you need to know about the social media giants jump into the market. This is your weekly source for social media news and views. This is The Thursday. Welcome into The Thursday. I am your humble host, Jacob Bodner. On this week's episode, we are talking all Facebook IPO all the time. It's really all that mattered this week in social media. We'll have a couple more social media stories for you on the next episode of Status Update, but for right now, it is Facebook IPO. If you haven't heard, and you should have by now, Facebook filed for its initial public offering and hoping to raise $5 billion. They did so on Wednesday, yesterday. And this has been long rumored, not exactly a surprise. It happened on their 8th birthday. And according to a report we talked about last week on Status Update, this was expected. Nothing really new here, nothing exactly earth-shattering, but it does give us some insights into what's going on at Facebook. If you read the S1 form, which is the form that's required by the SEC to do your IPO, you find some interesting tidbits about Facebook within the S1. I want to go over a couple with them right now. With you guys, just to give you an idea what's going on at Facebook and what this really means in total. The first one, they're seeking to raise $5 billion. That's a lot of money, and that's very interesting. $5 billion is a ton of cash, but a lot of people worried going into this when we heard about valuations of 70 to 100 billion, if that was too much money. Well, we look at how much they raised, right? So Facebook brought in $3.7 billion in revenue in 2011. Now that's revenue, doesn't include capital they might have, doesn't include cash on hand. That's just the revenue they brought in 2011. Their total income after expenses was $1 billion. So they're bringing in a lot of dough, and it's consistent money. They've had insanely incredible growth rates, and that's not exactly a surprise. Obviously, this is still a growing venture, or still a growing company. Really a company that started in 2004, but in all honesty, is just now finding its stride in terms of raising money and making money off of the business. So, and they even say in their IPO, hey, or in their S1, we don't really expect growth rates this extreme in the future. Now, by the way, if you would like to get any insight into why you shouldn't buy Facebook stock when it is released, read their S1 report. They have a section in the S1 report dedicated to risks. Essentially, these are the worst case scenarios, from the government might shut us down in some countries to Mark Zuckerberg might die. That's literally one of the risks. So if you want to be scared away from buying Facebook stock, read that section, because they actually do highlight some very interesting risks that apply to all social media sites, including government regulations. We see Twitter now basically saying, you know, if a government says to take down a tweet in a different country, we're going to comply. So these social medias do have to worry about government regulations in other countries, and even the United States, they list patent infringements, patent lawsuits they expect to go to court with. So there's a lot of risks with Facebook, and it's been that way for a lot of social medias. We've seen a couple, LinkedIn, Zynga, Groupon are all in public offering now and not doing too hot. Pandora, also another one, they're not doing very well. This is still a risky business to get into, and it's still rather uncharted territory. I mean, if you think about it, social media as we know it really began in mid-2000s. 2004 took off, 2006 really. So we're only 6 years into this. So it's not surprising there's a ton of risks involved with this. And a lot of people are worried, is this another bubble, or will Facebook really stick? Is this really going to stay around? In terms of Mark Zuckerberg and what he is worth in terms of this offering, we are looking at Mark Zuckerberg's stake at $28.4 billion in Facebook. He has a 56% voting authority in the company. So he certainly stands to be well compensated in this. Real quickly, just want to mention the valuation for Facebook being discussed at $75 billion to $100 billion. We think on Status Update, we talked about it, the episode number 3, this seems to be about on par. Facebook has a lot of information. They have 845 million monthly active users according to the S1 filing, which is to say that they have a lot of information on a lot of people, and so they can use that information to, advertisers love to have that information, and they have information that advertisers just die for, interests, demographics, things they've liked in the past, similar things that they might like. An advertiser could analyze pages that a particular user likes and then determine based on those particular likes if they would like their product or would be receptive to advertising for their product. So that makes sense as a valuation standpoint, and it's something that Facebook will certainly leverage in the future. One other thing I want to mention in terms of what we see in the S1 filing, an interesting tidbit. Facebook openly notes, and this is in that risks section that I mentioned before, in 2011, Zynga, the game creator that's created Farmville and all these other different games you play on Facebook, accounts for 12% of Facebook revenue. That includes virtual goods, that includes advertisements, that includes Zynga offering up page views that Facebook can then place ads against and make money that way. That Zynga is a huge part. 1/10 of their revenue comes from the one company. So to give you any idea, so that actually might help Zynga in the future. Knowing that actually might help Zynga's shares and Zynga's their own run in the stock market, because people might say, well, if Facebook's doing well, it means Zynga's doing well. Zynga's driving people to Facebook. But one thing Facebook said is, hey, if they go somewhere else with a big game, if they decide to take their next big game to another social network, that could hurt us considerably. Facebook relies on Zynga. It's an interesting relationship going on there. The one question I have for all of you, and that our question of the week will be this, and it's a question that I think Facebook is probably worrying about themselves. Facebook has pretty much hit its peak in terms of active users. 845 million monthly active users, 1 billion expected by August. In the United States, they have kind of hit a plateau, so to speak. And this is to say there's going to be this line of a threshold that people are above the threshold aren't going to want to get on Facebook, and everybody below it's already on Facebook. And it seems to be that's the point they're at in the United States, and their main growth is happening outside of the United States. At what point does Facebook stop growing, and how does that affect their advertising? How does that affect their ad revenue? Their ad revenue would then plateau. You can't charge more if your user base isn't growing more, but if you gain more information about those people, then you could possibly charge more. So I think what we might see in the future is Facebook wanting more information about you, and that's what the timeline is. I mean, the timeline is, hey, we have this awesome way of showing all of the information you've provided us, but at the same time, provide more to us. Provide life events when you bought a car. You don't think when you bought a car is a pertinent ad to you, but I just bought a car in August. I put that on my Facebook. There's a very slim chance that I'm going to get served an advertisement for a car, because they know I just purchased a car 6 months ago. I'm not in the market for a car. But if you put on Facebook, I just purchased a car in 2000. It's been 12 years since I bought a car. All of a sudden, they think, well, you might be wanting a car. We're going to serve you up some car ads. Facebook is going to be wanting more information from you at a higher rate because they need to provide some value to advertisers to continue to increase ad prices and continue to gain revenue. That is going to be information. Your information is what's going to increase those ad rates. So, and that's not a bad thing necessarily. I'm just saying be wary of what information you provide, but I'm saying that's a change you're going to see come to Facebook. They're going to want you to fill in the blanks of that timeline, because that is very important information to advertisers. So I guess the question this week is, how do you think Facebook stays in a growth stage? How do they not plateau? Now, in terms of revenue, not necessarily in terms of users, but in terms of revenue. There's only so many ads you can serve up and so many ways you can serve them up. Post in the comments section or a video response, or tweet me at Jacob Bodner. I think they're going to want more information on you, and that's very valuable to advertisers, and filling out that timeline is going to be a huge part of it. So that does it for this episode of the Thursday, our Facebook IPO special. Links to all of the stories I used for all of the information are available in the description below, and you can check out past episodes of the Thursday at our YouTube page, and if you click down there, you will get, or maybe it's down here, I don't really know which way it is on your screen. Down there somewhere, there is a link to our latest episode of Social Biz, which was on Tuesday. Check that show out on Tuesdays. That's about social marketing, and we talk about different case studies and whatnot, so you should check that out, youtube.com/rtimemedia. Subscribe to the channel to get the latest, and we'll have a new episode of Status Update for you on Saturday. Special day because of the Super Bowl. Saturday at 4 p.m. Eastern at live.redtie.tv, and podcast later at redtie.tv. Have a fantastic week, everybody. Adios.